Hey everyone, welcome back to the Your Money Your Life podcast. We're at episode 301 of the podcast, 301. So make sure wherever you're listening, you like, subscribe, you five-star rate and review this pod. We do this every week, so you want to stay tapped in and connected. First thing I want to do is jump into the market update. There's a few themes that are driving the market. One of them being AI, another one of them being the economy. How's the economy doing? How's jobs? How's inflation? And also the government shutdown is another theme that we have to watch closely and how that affects everything. So there are a few key themes in the market. Let's first look at the chart. The chart's going to give us a status update on what's been going on. The past 5 days of the market have been down about a little bit over 1%. And that's again driven by those themes that I mentioned. The big drop was a couple of days ago on the 4th, where we saw the market drop, and a lot of things were, you know, the few things that I mentioned as far as the themes related, right? And then we recovered a little bit of that yesterday. And this morning, as the market before it opens is about flat in the pre-market trading. If you get this, you'll probably get this when we are trading, right? Because I'm recording 5 minutes or so beforehand. If you pull back a month, the market's still up almost 1%. 6 months we're up almost 20%, and year to date. And the reason why that 6 month mark is because boom, you hit roughly the bottom of that pullback that we saw in April, late April, early May, Liberation Day, as they called it. And the year to date, we're about 14%, 15% higher on the S&P 500, which again is a strong year. So the big theme is like, are we going to actually stay? If we stay in this flattish to lower period for a few weeks, then we might have finished this current bull market and end a period of lower growth, stagnation in the market, lower performance. If we bull push through this and the momentum pushes the market higher, but we got a few more months to go of this bull market. So it's just going to be a matter of those two things at play. Those are the two possibilities I see when you're looking at the current market. Let's actually get some insight from some of the reporters on CNBC. October did see significant layoffs. So this was from a Challenger Gray and Christmas survey report. They said there was over 153,074 layoff announcements for October, and that's an increase of 183% from September, and an increase of 175% from the same period a year ago. And it's the highest level recorded for October in 22 years. So that's interesting. I don't know what's driving it. A lot of people think it's AI, it's this, it's that. But is it this company seeing that their revenue and projections are going to be lower, demand's going to be lower in the next coming year or so, and so they're trying to pad income and profits by cutting overhead? Could it be AI and efficiencies making things easier to do? Amazon's come out front and said that's what we're doing. Could it be other things? Government shutdown. All those things are playing a part. So there's also a ruling that's in play. The Supreme Court is going to rule against the Trump administration's aggressive trade policy after High Court justices on Wednesday expressed some skepticism about the trade taxes legality. The potential ruling would trigger a rollback of the president's tariffs, and that could push stocks higher. Because again, remember we saw Liberation Day was the reason why stocks dropped because of the tariffs that were going to hurt either consumers or the companies domestically. And so that's an interesting thing. There's also AI at play here. The equities a little bit rebounded yesterday, but we're flat today. Um, and that's an interesting plot right now is what's going on in the market. We'll go back to the chart. Again, we've had a strong year, and we'll see how we close out. Those two things are the things that I see in the market. Those two themes, we're going one of the two ways, one of two ways, and we'll need a few weeks for that to figure itself out. So one of two ways. Let's go to that report on the SCOTUS. So there's the collective skepticism from Supreme Court justices towards the administration's use of emergency powers to enact wide-ranging global tariffs may signal imminent intervention. This is by Bloomberg. Though not necessarily a quick resolution, the case could push the administration to rely on other legal authorities to impose tariffs, creating additional uncertainty and headaches for businesses and trading allies. So they're pretty much saying that if the Supreme Court's dissent, it doesn't allow for the tariffs, then the administration could try to use some other ways and alleyways to get what they want done, which could be more uncertainty and headaches for businesses. So that's what people are expecting. We'll see what happens. It's going to be really interesting when decision comes down and how people in the market reacts as well. That's going to be a really interesting thought process there. Let's move on to more current news. We just talked about it. Layoffs, October, crazy amount announced. And one measure is saying that it's, AI. People are saying that AI is driving it. Challenger, the person that put out the survey, cited the adoption of AI as the culprit and also noticed weakness in warehousing. So both consumers and business reduced spending. The U.S. has lost over 1 million jobs this year, the most since the pandemic. So yeah, I mean, things sound bleak, and I don't know if they really are, but now it seems like for real, people are like, man, this stuff's bleak. And we've said it. We've people called recessions for the last 2 years, and they just didn't happen. And so it's like, okay, is this the real recession or pullback, right? Like 2023 wasn't, 2024 certainly wasn't. And thus, is this the real one? We'll see. That's the big thing to see. But you're getting a lot of reports that sound concerning. Here's another one that sounds concerning. The FAA plans to cut air traffic by 10% at 40 airports. So, of course, the Federal Aviation Administration governs and takes care of the aircraft traffic controls, our airways. With the government shut down, now the longest on record, the Federal Aviation Administration announced plans to reduce the number of flights at 40 high volume airports by 10% from Friday. Administration officials also say they are meeting with airlines and will release a list of affected markets on Thursday. Air traffic controllers have been working without pay, and staffing shortages have already caused delays and cancellations across country. So they're working without pay. I was watching, was it, a report, CNN last night, they were saying, we're working without pay. They can't even get pay the babysitter now. So how do you go to work if you can't pay the babysitter? Because the babysitter can't come. They can't even fill the car with gas because they're working without pay. And that's definitely not cool. There's over, I just did a TikTok on it. There's what, 1 million workers in this situation. There's 600,000 that are furloughed, which pretty much means you don't have a job until they bring you back, and you don't get paid until they bring you back. So a lot of these things are, not in a good. Right now, the shutdown is estimated to be costing the U.S. economy roughly 15 bill a week. Ooh, 15 billion a week. Wow. And so yeah, this is this thing that's hurting the American people. The shutdown needs to end because it's hurting the American people, and people are kind of, feeling the effects of it very, very heavily. Someone not feeling the effects is Elon Musk. He is in the middle of a vote by shareholders if they're going to give him a $1 trillion pay package. So Tesla annual shareholders meeting on Thursday. The company is expected to disclose results of the vote on CEO Elon Musk's pay plan. The company announced the package, which could be worth nearly 1 trillion in stock in September. Both Musk's extensive holdings and his loyal base of followers, the CEO is very likely to succeed. So they're saying, hey, most of the shareholders. So this is the shareholder vote. The people that own more shares have obviously more influence, and that's bigger sovereign health wealth funds or bigger private capital firms, and they're mostly voting for his pay package. I think the one dissent, Norway's 2 trillion sovereign wealth fund, managed by Norges Bank Investment Management, said it would vote no. Norges is one of Elon's top shareholders, but most people are voting yes, and so he's going to get a $1 trillion potentially with a stock package. It's going to be worth 1 trillion. Isn't that a lot? 1 trillion. So that's interesting. While we're looking at the that's two sides of the economy right there, right? We'll see how that pans out. That's a very, very interesting thing for that man, Elon Musk. Let's jump into the financial roundtable. We haven't done one in a while. A financial roundtable talking about things that need to be talked about, discussed between us. Today, I want to talk about something that's actually interesting: tax deductions versus tax credits. What are they? What's the difference? Are they the same? They're not the same. A lot of people think tax deductions and tax credits are the same, but they're not. Understanding the difference can literally save you money. So let's think about it in a simple, example. The tax credit reduces your tax bill dollar for dollar. So if you owe 200,000 in taxes and get a $20,000 credit, you now owe $180,000. That's pretty straightforward. A tax deduction, on the other hand, just reduces the income you're taxed on. So if you get a $20,000 tax deduction and you're in the 37% tax bracket, you only save 7,400. That's 20,000 times the 0.37 or 37%. And that's what your deduction savings are. So most of the people that are talking about like deduction, they're bragging about deduction, their write-offs or things that they do write off. A lot of the times the deduction is not credit, which is still good. It's not as, it's not a dollar for dollar credit, which is a tax credit, but they're still good, right? You want to get your deductions. But we know credits are pretty much obviously a better in a scenario when you can get them because they hit your tax bill directly dollar for dollar. But the deductions are still a win. But you do want to know the difference, of course, if you're talking to someone, you're expecting something, and they're overselling some sort of hacked or credit hack when it's actually just a deduction hack. You want to know the difference. Folks, we do this every week. We are hitting some milestones at New Street Advice Group in client households and assets under management. So make sure you tap in with us and share those with your family and friends. We will see you next